Hey guys, welcome back. In today's video, we are talking about the huge AMC catalyst, the serious gamma squeeze, the short margin call, and many more in this video. Now, firstly, we've had some catalysts over the weekend. AMC just dropped a major catalyst, refinancing Odeon debt with up to 425 million facility to extend maturities and lower interest rates. So stock is already sitting above 1.8 with massive 1.5 in the money call. Now, with the market makers hedging plus the gamma, it could push past towards $2 on Monday. So we're seeing how AMC is, of course, furthering improving their financials. You can see they refinanced 425 million. We're paying off the higher interest debt. We replaced it with the low interest, pushed payment out to 2021. Same debt, but better terms. So more cash flow, more flexibility, and more time. And this is something we've obviously constantly talked about for AMC, is where the previous high interest debt, which was 12.75%, we don't have to pay that anymore. We're paying at a lower interest rate. And this saves us money. And this is very important because ultimately, this is what leads to a better earnings. This is what leads to a better profitability. And of course, when AMC is making profit, there's a lot more things that they can do, especially at times like this. You can imagine how well AMC will do on top of what we're already seeing right now if they were to announce something of paying dividends, something of buying back shares. Now, that will be able to done if they are able to make a large amount of profit, if they are able to have good earnings. And so that's what we want to look out for. And ultimately, everything that they are doing right now is to essentially put them in that position. It's essentially to put them in a comfortable situation where they can do anything they can that's in benefit of AMC without having to do anything like dilution. So this is why we're seeing that this is obviously good news. Aaron's comment on this is that with this transaction, AMC has once again taken decisive action to strengthen our financial position by extending our debt maturities by 4 full years, while simultaneously reducing our annual cash interest expense. I would like to thank all of our lenders who continue their staunch support of AMC, and this particular case, the professional team at Deutsche Bank. So a lot of things that I want to talk about here. Firstly, now, the main thing, and we have always looked at this point in the past before, but it is still very important to note for people who don't quite remember, is that the fact that the lenders who continue to support AMC means they've realized the value of AMC. They want to be able to actually have a proportion of that, because you wouldn't lend out to a company if you think that company was going to go bankrupt, if you think that company wasn't going to pay back to you. And more importantly, you wouldn't ask for the shares of that company if you didn't think there was a future, if you didn't think that the return was going to be higher. If you thought that AMC was going to drop lower in price, you would just ask for the cash and you will get the cash back. But if you're asking for the shares of AMC in return to pay off that value, it's because you think that AMC would have a higher value in the future, and therefore that's more worthwhile. And so with this, we're seeing not only the confidence of AMC, but more importantly, the confidence of AMC investors. And these are investors who are lending out hundreds of millions, billions of dollars, that they are willing to do so because they've realized the potential of AMC. Now, another thing I want to talk about is, of course, the Deutsche Bank that was involved. They're obviously based in Europe. The reason why I talk about this is because their relationship with banks like UBS, who we know have a massive position in AMC, not only in longs, but we talked about with the swaps positions that they've inherited, that evidently the toxic, infamous GME and AMC swaps. And so potentially there is something there as well, because there are institutions, there are individuals who are in need of AMC shares. So they're trying to come to things like this. But you can see how this enhances the liquidity, improves the flexibility, and better positions AMC for the future. And is what we were focusing on. When you have more money, you're able to do more things. Firstly, whether it's paying off debt. Secondly, making more investments. We've already seen how well the HYMC investment has done for AMC. So imagine if they make other investments. But also, one of the biggest reasons for why AMC is making headlines, aside from the fact it's gone up, what we've seen with over 100%, is the fact that recently, because of how well the box office is doing, AMC has put themselves in a very great position to gain the most benefit from this. And they've done this by, in the past, investing their liquidity, investing their capital into premium theaters. And so if AMC were to have even better liquidity now, a better cash flow, and they were able to invest into other things, you can understand why they will position themselves even better. And that's what he goes on to obviously talk about. And so with this, we're going to be looking at AMC doing very, very well. Now, another weird thing about this is because of this, what everyone is linking to. So this is what Roaring Kitty obviously put on his Twitter, where he had this screenshot and he had 109,420. And now people are linking this together, where Odeon deal completion aftermarket into Roaring Kitty YOLO 419 right before the 420 open would send us, where we had high and unusual trading activity at 109.26. So where he could have been that was Roaring Kitty buying at 109, and he will review his position right before 420, which by the time you watch this, it may be that day, or you may be watching it a day earlier. But this is what we're seeing, and especially with how the timing has gone, especially with what we've already seen with AMC and the fact that AMC has done this exceptional movement in the past few days, people are obviously linking this together. Now, I definitely do think that if we are seeing something of this sort, of Roaring Kitty returning to Twitter, talking about his AMC position, especially if it is the fact that he bought at 109 and he was buying at all of these prices, or wherever he was buying AMC because it was at $1.09, whatever the reason was, this would have massive volatility. We've already had so many things ongoing for AMC because of the calls, because of the news, because of the institutions who want to buy in. This would just be the cherry on top. And so this isn't me confirming that this is going to happen, but this is me saying that there feels like there is some sort of correlation here, and we are seeing this. It would be a huge boost to what is already happening. Because furthermore, institutions have given the green light to let AMC find its true value when we are up over 18% and they haven't halted the stock once. So this is something that I was surprised with as well. On Friday, as the day ended, we saw AMC up 15%. At one point, AMC was up even higher than that. And in the past, we've seen how AMC was halted, but now it's not. And now it's not surprising. And it doesn't surprise me either, because we've talked about this. Recently, there has been so many institutions who have buying into AMC, and it's in their best interest for the price of AMC to go up. And so previously in the past, and we know this already, the regulations aren't here to protect the retail. They're here to protect the institutions. And so in the past, it was because the institutions were at risk, and so they had to protect the institutions. But now the benefit of the institutions outweighs the risk of other institutions. And so it feels like they're not halting AMC because they want other firms to benefit from this. And that's why we were up over 18%. And this is obviously a very good thing, because it means that if we are not faced with halts, we're able to see AMC have its true run. We've seen how AMC should have been way higher already in the past, but there were days where we saw AMC was halted once, twice, 3 times, and days where it was over 10 times, 20 times. And so if we are able to be in a fairer market where AMC is not facing this, then we can expect AMC to do exceptionally well going into the next few days. And this is the big thing. Going into Monday, it feels like we're definitely going to be seeing massive FOMO, where people all want in on AMC, because we already ended the week with 150 calls extremely deep in the money. People now want to bring it above $2. We have the 250 calls next week as well, where people are already opening up and seeing that interest as well. We are seeing how people want to take this to the next level. And so it definitely feels like going into the Monday, we are expecting big things. But especially at times like this, especially when we talk about, in terms of the FOMO, in terms of big volatility coming, this is also when the institutions who are at risk want to strike the hardest, because what is beneficial for us is obviously not good for them. And so going to this Monday is definitely going to be a battle. And it goes for this: the battle for $2 has begun. The more close to the money call contracts that retail buys, the more market makers are likely to hedge, buying up shares of stock. This could lead to a serious gamma ramp, creating an immense short squeeze. So this is what we've said. People want to fight for that $2 now. People want to fight for that $2.50 and of course even higher. And what all of this is going to do is increase that gamma pressure. And we're ultimately going to be seeing a gamma ramp, a gamma squeeze, then that would then lead to the short squeeze. Because we're already seeing how much volume is involved. And we also know how much money and how much volume can be involved. So when you combine all of this together, when you've realized what is at stake here, we talk about AMC going into the heights. We talk about AMC going way past $2, going past $2.50, going past $3. And remember, this is a mixture of so many things. Firstly, when AMC goes above $2, you're going to be seeing that FOMO we talked about. So that's already then going to take AMC to a higher level. But then because of that, we're then seeing the $2 calls in the money. And if AMC were to go higher because of the FOMO, because of the pressure, it's then going to go above $2.50. So the $2.50 calls are going to be in the money. And that's going to lead to the gamma pressure, which would then push the price up to $3. And then once you are at $3, FOMO is going to start again. People don't want to miss out because they're just seeing how AMC has gone from $1 to $3 and they're going to start buying. And then you can imagine the $3 calls, the $3.50 calls, and that's going to go on and forth. And that's going to create the short squeeze because so many positions are going to liquidate it on the way. And it's why I've said at times like this, we are going to be faced with the most pressure because they don't want this to happen. You can see how easily this domino effect can occur, so they want to prevent this. Moving forward, the AMC current share price, there are approximately 168,000 in the money call contracts, which accounts for 16.8 million shares that have the potential to be exercised. Breaking $2 would add an additional 178,000 contracts to that number. So going back to what we said earlier of how easily pressure can be built up, how easily this run can just start and go and never be stopped. This is what we're looking at. So this is why institutions are keeping close eyes. This is why I'm saying going into Monday, we're definitely going to be seeing that volatility. We're definitely going to be seeing that FOMO. And more importantly, we're going to be seeing that suppression and manipulation because they don't want this to happen. And so this is how we have to fight through and know what is going on. And remember that right now with the price of AMC moving, yes, news is playing a part. Yes, news is good for AMC, but it is not because of the news that we've seen AMC go up this much. No news, because we've seen even better news in the past before, it has not even allowed AMC to go up 10%. So how is it now suddenly news has allowed AMC to go up 100%? That is not the case. The reason why we're seeing AMC going up is because of the liquidity issues faced by hedge funds. It's because of all the institutions who want to buy into AMC. And that's what's happening. Because if you take a look at the dark pool, we're still met with suppression. We're still met with manipulation, where we saw this amount, 87 million shares traded. And we saw 60%. So this is still higher than the industry average. It's still higher than the market average. However, it's obviously considerably lower than what we were faced with a couple of weeks ago of 70%, 75, 80, even 89%. And you can see just how big of a difference that makes for AMC. When we're not met with 90%, we're able to go up 15% in a day. And this is still 53 million volume hidden away. Of course, if that were to all hit the market, you could imagine how very likely we would have had add a zero behind this 15. It would have been 150%. But it just goes to show that we're still faced with suppression. We're still faced with manipulation. So don't think that right now we're going up is because they're not suppressing us. They are still doing the same. And one of the biggest things, and it's why we knew that AMC was going to go up. We didn't have an exact understanding of where the price of AMC was going to go to, but we knew that the run was going to happen. The reason for this is because AMC is looking exactly like 2021, just before the squeeze. When you take a look at the price behavior, the slow grind up first, the tight consolidation, then the violent breakout. When you take a look at the volume pattern, gradual increase, then the massive spike right before the breakout. Take a look at AMC, the gradual runs, the spike in volume. These are all what we're seeing currently. Then when you take a look at the options, we've already seen the options. We've been looking at the options for the past few days. We talk about the 150 calls. We're talking about the $2 calls. These are all seeing how people are stacking up. And bear in mind, people are not just buying out the money, which is already having an effect, but they're still willing to buying in the money because they feel they want to exercise those positions. And so this is what we're seeing. Exactly at the current $2 setup, the trigger moment, we are seeing this, and that's when it'll become a real squeeze. So you can understand why we're saying with the gamma squeeze, with the historical data, we're looking at a massive thing being built. And remember, shorts didn't leave. They loaded on the way down, and now the bounce begins because they aren't able to hold AMC down any further. The reason for this is because they can't close out AMC. There are too many counterfeits, billions, possibly trillions. The apes shares were never settled. They can't close that out either. You short one AMC, you will short one ape, and it was created into two. And now we see with everything going on, you're seeing this come into fruition. You're seeing how all of the problems they've created in the past to hinder the apes are now coming back to bite them, because even if they wanted to get out right now, they aren't able to. They have already created so much synthetics that they will have to pay 10 times, 50 times, 100 times, 1,000 times the price they made originally to even get back those shares. And so this is ultimately what we're seeing. For those wondering what AMC debt load looks like, no substantive debt wall or debt notes are due until 2029. So whoever is short AMC is looking at another 4 years of retail apes buying more cheap AMC shares. And this goes back to what we were saying earlier with how shorts didn't leave, they loaded on the way down, because we saw how not only were these short sellers not able to cover out their positions, but in order to make sure they didn't go into the red, they had to continuously short AMC. And the problem with that was they thought if they were able to continuously short AMC, apes would sell, apes wouldn't buy. But we did the opposite. We bought because we saw it at an extremely cheap value, so that now with the same amount of money, we're able to get even more shares. Previously, we were seeing apes who were buying $50 every week. And in the past, that may have only got them 5 shares, potentially 10 shares. But when it was at $1, you were able to get 50 shares. And this is just talking about people using $50. There are people using $100 weekly. There are people using $1,000 weekly. And that's how we were able to buy more. That's how we were able to put this pressure on the short sellers. And so right now, assume we can now conclude that market makers are no longer in control of AMC, then who is? The answer is likely one or more activist investors well aware of offshore positions in AMC. This goes back to what we talked about earlier, where the reason why we're not faced with as much manipulation and suppression right now is because there are institutions who are involved right now, who are involved on the long side, where if they realize that they are able to stop the manipulation and they are able to gain a massive benefit from this, then that's what they will do. And it just feels like these companies who have bought a crap ton of AMC now sees that, oh my God, AMC can 10x, AMC can 100x, AMC can 1000x. But the reason why they haven't yet is because of dark pool. But I can stop it. And that's what they're doing, it feels like. It's why we've seen a decrease in dark pool, is why we're seeing this pressure being built up right now. But at the end of the day, since 2021, AMC has been heavily manipulated nonstop. Nothing has changed. It only been delayed, but a reminder that all trades must settle. And this is what we've said with earlier, where the short positions that are not closed, the short positions that have been doubled down, these all have to be settled. And now when we see more and more people involved, more and more people who want to see AMC go up, not just the apes, not just the normal retail investors, but we're talking institutions, banks, big investors, they are now trying to get that justice as well. It feels like to me, they are now trying to force that settlement as well of AMC shares. And now going to the future, this is what we've said with going to Monday, going to next week. Yes, FOMO, but also remember to face the volatility, remember to face the fight that we're going to be seeing, because perhaps 1 billion shares trading days is just ahead for AMC, maybe 2, perhaps multiple days. Because if we're going to see this continue, if we're seeing this 150 calls being exercised, if we're seeing it go past $2 and the $2 calls get exercised, if we're seeing this FOMO, if we're seeing more and more institutions and retail investors who don't want to miss out on this opportunity, we're going to be looking at massive trading days. We are going to be seeing the volume go up. Already we've seen 88 million. This could easily go to 100, 150. This can go even higher. And when we're seeing 150 million volume, and then you consider in terms of what the dark pool, what the offshore, what the synthetics can be, you can obviously expect it to be in the billions. And that's what we're going to be looking at in the future. And especially right now, currently, AMC is hard to borrow for anyone trying to short it. So this is why I've said this Monday, there is so many things that's going on. The very fact we're looking at this right now, the very fact we're seeing hard to borrow for AMC shares, you will remember what has happened back in the days. You'll remember exactly what happened. You'll remember when the cost of borrow was going up into the hundreds of percent. We already saw this pattern build up. We didn't see it go to the 100%. We didn't even go see it in the doubles. But the very fact we saw it go from 0.3 all the way up to 1.08 in a short amount of time, we knew what that pattern was. We've seen it in the past before. And this is what we're seeing right now. The very fact we are seeing hard to borrow shares for AMC, this already tells you everything you need to know. And what we've seen with AMC as well, this is one of the biggest reasons for why people want to buy, is because of the opportunity that is there. Earlier, we talked about profitability. One of the best investments AMC has made is, of course, into HYMC. But now we're seeing AMC to showcase that same thing as well, where profitability will have AMC have the HYMC moment very soon. And remember, this isn't based on the squeeze, on the sentiment. This is just based on the fundamentals and the psychological behind it. This isn't based on the gamma calls that we were talking about. This isn't based on the short squeeze. This is just based on the fact of what people will want to buy, what people will feel like about AMC. So imagine right now, with everything that's going on, even with the Michael Jackson movie, with everything else that we've just talked about, imagine what the short sellers are feeling right now. Imagine what the pressure is like. Because if the news are claiming that AMC is up because of these news, because of the box office, then by that logic, we're going to be seeing AMC going up even higher because we have so many movies that are coming out that are going to do exceptional. Now, I've already said, I don't think that is the reason. That definitely plays a part because it gives the incentive of AMC doing well. It gives the attraction for investors to buy into AMC, but that isn't the sole reason, nor is it the main reason for AMC to go up 100%. But if people are claiming that to be, if that is the reason, then with what we have right now, we're only going to be seeing AMC go even higher. But then even when you disregard this and you just talk about the box office doing well, you just talk about the revenue increasing, that is still going to play a part in the revenue of AMC increasing anyway. And what we're seeing right now is how you can see one of the largest and most influential theatrical exhibition companies in the world, talking about Cinemark. But what they failed to say is that, of course, the number one is AMC, where it's the largest movie exhibition company in the United States, the largest in Europe, and largest throughout the world. This is still important regardless, because this will be a gauge to go about how well first quarter is and how well second quarter would be for AMC as well. We're going to be seeing how they're doing, and you can apply that to AMC, but on an even bigger scale, because we have a bigger market share, because we have done a lot more, because we have a better foundation, a better retail base, a better customer base. This is going to be, but it's still going to be a good gauge. It's still going to be a good understanding of what's going on. And I definitely think a lot of people are going to be keeping a close eye to this. And I think even to a degree, if Cinemark were to report really, really good earnings and talk about how well the current industry is, the current market is, I think instead of people then being attracted to Cinemark because of how well they're doing, they're actually going to be buying into AMC because AMC has a bigger market share, because AMC is more undervalued. And so this could actually play a part to actually attract capital into AMC as opposed to Cinemark, even though it's their own earnings. And now another big thing. So today, and this is what I even said in my last video as well, right now, the geopolitics is a big, big thing because you're getting one news today and the other news the next day. And right now, we are seeing the Strait of Hormuz, and we're seeing what even Ken Griffin is saying, where if he's saying that if it's closed and it lasts 6 to 12 months, the recession is unavoidable. And that's what we want on AMC and GME, because now we are seeing the banks algo pricing in the recession and dropping stocks on all hedge funds, whereas reducing collaterals and margin calling them, and banks de-risking and closing swaps on AMC and GME. And so today, we've just seen the Strait of Hormuz being closed again. So this is why we're still seeing this continuously on the table. This is not over yet. And to me, it feels like it's far from over. Yes, there will be good news like we saw last week, but then going to this week, we're already seeing bad news. This is like an elastic band. It could bounce either way. Maybe by the morning, we're suddenly seeing good news again. But this volatility is what people are already pricing in for. And they are trying to prevent themselves from getting margin called, but it's obviously inevitable to avoid this. And if we're taking a look at this as well, not only is Ken Griffin worried about the recession, but we're seeing how Spirit Airlines has asked for an emergency bailout to avoid bankruptcy and liquidation. And when you talk about who's the largest single holder of Spirit Airlines, it is Citadel. So you're seeing them losing money in so many different areas right now. And the bottom line on AMC and GME, and this applies to the investors that are involved, the market makers that are involved, the counterparties that are involved, because the Citadel and Virtuous counterparty on the equity swaps, which are banks, have to fail for the swaps to be unwound by the banks. And now as we're seeing this closure, we're seeing this happen to itself, where if either Citadel or Bank of America fail to post collateral through daily variation margin calls, then we're seeing the event to default. And what is going to be the biggest possibility to trigger these defaults, to trigger the drop in collaterals, is the geopolitics news that are on right now. And so whilst the geopolitics news may not have a direct effect on AMC, you can see how it affects these companies that are involved, the banks that are involved, which then would affect directly to AMC. And that's what you have to pay close attention to. And then the big problems as well that are still ongoing, the private credit problems, where now so big, even banks can't pretend they're not deeply involved. We've already talked about how big this problem is, but they're just highlighting it. They are just now realizing that, oh shit, is looking like another '08 again, where you're seeing this, they're talking about the Lehman 2.0 drill. They're talking about how this is going to be the same thing that corrupted the Lehman Brothers back in '08 to now corrupt another bank. And we're seeing this whole thing go on. We're also looking at the Federal Reserve reporting an operation loss of minus 18.7 billion in 2025, marking its third consecutive annual loss. This is how we're already seeing the illiquidity that's ongoing. This is how we know that they're failing to keep up. And then we're seeing how the US technology sector is approaching a massive debt maturity wall. What was the reason for the S&P, for the Nasdaq to go up so high, is now facing that problem where if it isn't handled well, all of that value that were gained, all of the value that was the reason why we're seeing the market up so high right now could all disappear. And you can imagine how devastating that would be. As always, now this is Financial Advice, and I'll catch you guys next time.